The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. This is the November the 7th session, and 1 day to go, and then I do my webinar, my all-day webinar, 9 o'clock until 4:30. Really looking forward to it. Been preparing for it. I'm going to be using the CD, the Introducing the Chapman Wave Methodology, as a core curriculum. But constantly, I'll be going to all the other aspects that I've been including over the years, the moving averages. How you can look at a blank chart. Look, we'll take a look right now. You've got Twitter. It's just come out. That first opening pop, I don't usually bother about. It did go to peak A, B, and then a C in the 1 minute chart. That's not really where I like to take the count from. It needs to form some kind of a base. Round number 45. Always look for those round numbers. And then we should see the start of some, whoa. For 7.5 hours of talking tomorrow, I better get that voice just smooth as anything. All right, we're ready. So we'll look at the. I believe that the Twitter Inc. TWTR, we're trading at 47 right now. I believe it'll form some kind of a base very soon, and then we'll start looking at the count. You don't need the technicals with it. You could just have a blank chart. Doesn't matter. So now let's go through the numbers. The Dow is, I'll do this because we might even archive this for tomorrow. Let's just do this. We've got the E-minis at this particular moment. The E-minis are very important because I want to show them. Let's see, the question was always, can I see the right hand? Yes. I believe you should be able to see very clearly the numbers on the right. There was a cup formation that I was looking for in the E-minis. Yes, it's gone through a parallel wave count. I'll be talking about that a lot tomorrow. G/C. Why do I have it? Because of a number of reasons. It overlaps from the previous high of the 19th of September at 1726. It went down to 1640, but it never took out the previous low, so this could just be an extension. There's nothing much that you have to really worry about here in terms of the wave count. It is chart patterns, because the 120-minute chart did exactly that. It stayed in that trading range, went to the upper level of the rectangle, went to a peak D in that diagonal. See that dashed line that I drew for my subscribers? Every day I show the E-minis, this S&P E-mini, to the next contract. This is the December contract still. And I show it the daily and the 120-minute chart. I don't give trades on it. What I do is I teach, I show because it trades almost 24 hours a day. I show all the different techniques, discuss the cup, discuss the rectangle, discuss walking the 9-period moving average, discuss the left side to the right side time price match, discuss the previous high of 1773.25, discuss the fact that this particular pattern that I'm looking at in the general market, the reason why we went back to short this morning, and we even added to one of our shorts that has been really successful, is because this market had met all the criteria. It still could have another little bit of a bounce, but it's met all the criteria I was looking for in the Chapman Wave methodology. Now we've done the E-minis, which says if there's a break of the 1750 to 1751 key support, 1747 will be hit quite quickly. The resistance now at 1756 on the E-minis is at 1759 to 1763. And very, very strong. Most importantly, what I'm looking at is in this particular formation, look at that right arm extension where the E-minis shot up today. But look, the MACD did not. It was pulling back. And the histogram, as I said yesterday, was slowly shrinking. And the stochastic was starting to break under 80%. That's just a heads up. The day's young. It's just a heads up to say, watch out. This could, in fact, be a Twitter top of some duration, I don't know. It could be very short, but it could actually turn out to be something deeper. Now let's go, we'll take this away, and let's go right to, and it's leg D in the E-mini weekly chart. So now we're going to go to the Dow. And I'm going to do this very carefully. Why? Because I'll be away tomorrow doing my webinar. Folks, there is still time. The way I've set it up is that I'll be going through the most pertinent points of the CD. I'll be not only discussing the CD in terms of, this is introducing the Chapman wave methodology, that's a CD right here. I will not only be discussing all these different points, going through the chapter headings to show you exactly what I'm looking at, but that CD, when it arrives, I had to send down a new set of CDs to TFNN, to the office, and they will send it out right away. When it arrives in a few days' time, it doesn't matter. I will have gone through these things so carefully that you can get right into the webinar. If you're going to do it as an archive, if you're going to do it live, it makes no difference. Together with the Tiger Dollars, together with throwing the CD in, a $249 value, and getting my monthly newsletter, we've had a terrific month and a terrific week so far. I'm hoping that we actually get stopped out of some of these things, because that money can be deployed a little bit better now towards the short side. I think some of the longs are getting a little bit stretched. I shouldn't say I hope to get stopped out. You like to keep your positions as long as possible. Now, this is really important. In the Dow, and this is what I'm going to explain, I will slowly introduce it to how I use the MACD and the slow stochastic. You remember what I said? That green line, that on the daily chart, that fast-moving average, is still showing internal strength in the Dow. It's going to take the shorter time frames to turn that negative. And when we look at the shorter time frames, what do? We look at the 120. If you don't have 120 minutes on your software package, most of you have 60 minutes. That's good. There's nothing wrong with the 60 minutes. Now let's keep going through this. So now the Dow is in decisive. There's no other way I can count it. This is leg E at this particular time. I could say E/A. I don't need to do that. It's still an E. It hasn't broken down. The Dow went to an all-time high. But wait a minute. What are we looking at? We're looking at, and one of the reasons why I'm quite prepared to have this archived for tomorrow, if we need to do it, and that'll be for Friday, the 8th of November, is because all the criteria, look at this dashed line that I drew in here to show subscribers, that resistance point, it went right to it today, to 15,797. What did I say in my daily analysis of the Dow? This is just one of the analysis. There's just a ton of information every day. I must spend more hours sometimes on the analysis and my daily call than the market is actually open. I don't know. I'm there at night. I'm there in the morning at 6 o'clock. I just love doing it because I believe firmly that the more you do something, the better. The more you constructively you do something, the better you get. Even if you just add a smidgen every day, it is cumulative. It's like compounding. Now look at this. I focused on this. I circled that area and I said the high that was made on the 23rd of July, 15,604, made a cup formation using the 9-period moving average, which had finally started to nick and then break below, finally closing just one day underneath, and then went to leg F on the 2nd of August at 15,658. That decline, I also teach you how to use numbers, how to count the bars, went down for, I think it was, 16 sessions or something like that. And then it ran up. And it went up in 16 sessions and went to the 17th of September to the high of 15,709. Then it pulls back. But look, it keeps making these cup formations. Patterns repeat. It's human nature. Patterns repeat over and over and over again. And all you can do is say to yourself, wait a minute, I'm going to stick to this methodology until it tells me I'm wrong. Like rectangles, I'm going to teach about rectangles tomorrow. How you can be in a trading range with a rectangle, and as you get to the border, you think it's going to break down. Instead, it comes right back. As you get to the lower part, you think it's going to break to the downside. Instead, it comes right back to the middle or goes higher. So this is something that's happened. There's the pattern. I showed my subscribers. I said, look at this. We're repeating the same pattern again. And I said this should go to a kind of either a doji high or will be down on the day. But most importantly, I even said it right there. Resistance is just above in the 15,790 to 15,820 area with 15,650 as support. What are we doing right at this moment? We have gone right to 15,797.68, reversed leg E. That's not a top. That's not a signal. It means nothing until the very next bar. But if that 15,676 low of today goes below 15,650 support, there's a really good chance that that 15,621 level on the 9-period exponential moving average will become the key level to watch. I say key level because you go, in my work, I could really say very simply, Dow's going to 15,320 to 15,270, and it should do that by Tuesday or Wednesday. I've got the technique to do that, but I'm not prepared to do that. Why? We haven't even reached the first level yet. I'm not going to extrapolate from 2 hours, less than 2 hours of trading into 56 or something hours into next week. But in the back of my mind, I'm saying patterns repeat. The pattern of the bar after peak F that made peak F on the 3rd of August was that was an inside bar, didn't break the low, didn't touch the 9-period moving average. We don't have an inside bar. We've gone to a higher high, right at the resistance of the Dow that I was talking about. And then what happened? It pulled back. So now I'm going to continue with this line of thought because the MACD fast moving average has not yet closed negative and the stochastic still at 84%. Is that saying, be careful, this is just a little bit of a pullback because I'm going to hold that 9 EMA and then I'm going to go to a leg F and confuse you. It might even be an F/B. I don't know. All I can say is I'm going step by step by step, which is why almost at the exact high today, we went short the Dow again, as we did the other day. We took a tiny little profit the last time. This time I don't know what we'll do. So far, it's a nice entry, up a very nice percentage. The day's young. I don't care. Let's see what the day ends at, and then we can talk about it. Now let's go through the numbers. So we continue with the line of action here in the Dow, and that monthly chart is the one that I was saying, a rising wedge formation. Candle looks fantastic as of now. Yes, it's leg F. Stochastic hasn't, it's at 79%, hasn't gone above 80%, and the MACD hasn't yet crossed on this week, crossed positive. So the day and the week is young in the weekly chart. We go step by step. The S&P's down, S&P's down 9 at 1761. Compound is down 53 at 3878. Gold is down 5. We've got bonds up 24 ticks, and the dollar's up 30 seconds. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, folks, Basil Chapman, Tiger Technician. Just real quickly, I had a message in the break away. I discussed this for a while. There's some fantastic traders here in the den, folks. It's worth coming to the den. Check it out. There's a stock called HomeAway Inc. It's AWAY, trading at 33.89, up 480. Back on the 29th, I typed in here because I was asked about it in the den. Leg A was struggling, needs to hold 30.50 to 30.30s, and leg B must break the 32.20s by next Thursday. That was back then, and it went where? In the Chapman methodology, you look for peak Ds to Es, and that's exactly what it did. Then it plunged, came all the way back down to the 27, 26, 27 area, made a peak A, pulled back, had another little minor A underneath, and today it gaps up into a leg B, and it fulfills a whole bunch of things. It starts leg B in the leg C in the monthly. That's very good. I must, at this point, go an F/A in the weekly, only because of the pattern that's forming. It's the rectangle pattern. It broke out. Probably has to come back and do some testing. So that was that one. Another quick one that I wanted to look at. Question in the den was, and I want to do this in any case, and that was WFM. WFM is, of course, Whole Foods Market. Now, I've done my own little research at our Whole Foods markets. We've got two within a mile and a half of one another. It's from where I am, it's a mile and a little bit one way and less than a mile the other, or maybe a mile. And I was looking at them, and I'm saying to myself, I think they've reached some kind of a top. I even mentioned this on the air the other day. And I forgot completely that it was earnings announcement yesterday. If I knew it was earnings, I would have tried to do something either with a put position or maybe a short. Maybe it would have got stopped out. But my bias would have been at peak E with the two doji tops. Oh, boy, for tomorrow, the silent doji, the doji, silent doji, WFM top peak E. And now it's plunged from the 65.59 area down to where it is right now at 58. That's one of the biggest plunges it's had in quite a while. So I wanted to talk about that for a moment. And one other thing, and I'm going to go there in a moment because we've got callers on the line, and it's IWM. IWM made a peak F top at 111.62. The piercing of the left side low bar in the H pattern. Oh, another perfect one. Perfect H pattern failure. IWM. Oh, one. Are we going to have an exciting workshop? Right now is exactly where you want to have this. Please, there's time to sign up. You will get the CD a little later on, another couple of days, whatever it is. I'll be going through everything in a thorough fashion. It'll be just the timing couldn't be more perfect. Just right now, for looking at what's working, why is GE up? Why are some of the other Dow stocks down? What's going on? What's the rotation? Why is USX still holding quite well? There's a rotation. Why the biotech's getting hammered? IWM at 107.74. The Russell iShares is trading at 107.74, down $1.38. That's the arch formation. And it's peak D, as I understand it right now, if it closes anywhere underneath 111.62. But if by Friday afternoon, if it closes underneath 107, the 9-period exponential moving average, that's going to say there's a good chance that you're about to have a sell signal to sell mode in the daily and a sell signal kicking in the weekly. But I need a couple of other things. The stochastic hasn't gone below 88%. I might hold off on the actual designation, but that's what I'm looking at. So I've done some of the questions here, and so I want to go to our first caller, Big Garo in Newport Beach, California. Hi, Garo. How are you?
Very good, sir. And how about you?
Very well, thank you.
Right. Today I shorted CLR.
Oh, very good.
At $115.50. Then I covered it at $109. It took half an hour. I made $6.50 on 300 shares.
Wonderful.
Now, yes, I'm very happy with today's trade. On a weekly chart, it broke the rules. I want to see that on a long term. The bottom of that weekly chart is $101.93. Let's say approximately $102. It has a very good support. The first support is 106.39. The second is 101.93. What are your thoughts about that? Is it a long-term short or is it a short one short?
I would, well, for you, a long-term short would be 3 hours. A short-term short is about 20 minutes. Okay, it's worth it. I'd like to look at it because CLR is Continental Resources, Inc. I think it's giving a signal right here that says, be careful of the long side, and this is more a 3 to a 5 week downward play, I believe. I'll be right back with Garo in Newport Beach, California, looking at CLR trading at 110.53, down 6. It is Continental.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. We're back looking at CLR. Dow's down 51, S&P's down 11, Comp Index is down 50, and we're on with Gary in Newport Beach, California. Now, Gary, you just had a fantastic trade. What I'm going to recommend is this, that
yes, sir.
There should be a bounce. I didn't get a chance. Where did I put it over here? The 120-minute chart. The 120-minute chart gave me an A, B, C, beautiful. Another one, a peak C, and then a peak D. That's exactly what we look for. Now it's pulled back. It's having an inside bar because the 200 period, I'm going to be teaching this tomorrow, the 200 period exponential moving average has become support. It says it could bounce. It could even bounce towards the 113-ish area, maybe 112.50 to 113.60. There is a 9-period moving average just at 115. My suspicion is that this is going to fail quite soon, and that it's going to pull back. If at any point CLR breaks, that's Continental Resources, breaks 108, then you're looking at the then you're looking at the left side low bar of 105.78 of the 9th of October as the next target. Breaks that, yeah, and then if all I'm saying is that the monthly chart, I've got a G/C, and everything is still quite strong. So I'm looking at that, I'm saying, okay, let's leave that for a moment. The weekly chart, this candle is saying if there is a close tomorrow in the 114 to 115 area, it's saying very clearly that at least for a little while, the 108 area to 107 is going to be good support. It shouldn't break that. and it should bounce within that. If it closes somewhere around 114.15, and on Monday it actually moves to 116, it says be careful. You could take another 3 to 7 sessions on the daily chart to move up towards the old high, but probably won't take out the new high. It'll get to 119, maybe 120, but it won't go to 121.78, and then it'll come back again. So this is the way I look at this particular candle forming in the weekly. The way I'm looking at it on the daily and the weekly, at this particular point with the weak technicals in the daily, that's the rudder, and it's saying it's going to drag the price down. So you had a fantastic trade. You know exactly how to get in. You know exactly how to get out. I would just be looking to maybe reshort this again. If it bounces, about another 1.5, another 2 points. And if the market generally remains weak into the close, this is still young in the day. We don't know what's going to happen. A lot of things can go on. But that's my looking at CLR. Hope that helps you, Garo.
Absolutely.
Oh, you remember we talked.
Thank you, sir. You're the master. Thank you. Thank you.
Well, thank you very much.
Very welcome.
I appreciate that.
Thank you. Sure, sir.
Good.
Bye-bye. Bye-bye.
Bye-bye. So now what I'm looking at, folks, let's see. So the QQQ series. Remember what I said the other day? There's a technique, another technique. I probably will mention it early into the webinar, but I only want you to really use this later on when you get really used to looking for Ds. This is where the peak D just fails. It doesn't happen often. That's why it's a variation on a theme. And it says, if the technicals are failing, and instead of going that 1 penny above peak C to make leg D, there is a turnaround, and it breaks the 9-period exponential moving average, and the MACD is very weak, and the stochastic is going under 80%, consider that you can put a plus sign, not a down arrow. A down arrow would completely conflict with all the rules that I make. It is a red, or change the color, plus sign, which says this is the variation. Every bit of criteria was met for a turnaround to the downside. At that point, you don't know whether it's just a dip and you're now going to go back to a new high for leg D, the real leg D. You just don't know. But everything is in place to say the QQQ series is failing. It has broken the trend line. It's broken support. And that you can treat that as if it was a D and do whatever you would do it at a peak D. Now, in my song, no, I'm going to wait for the song. There it is. My song goes, here's the Chapman Wave song, buy at the low and sell at the high. It's my original song, copyright 2002. It was actually written before that. The market goes up, the market goes down, supposed to buy at the low and sell at the high. Snap, snap. But you know what we tend to do? We buy at the high and we sell at the low. Chapman Wave is what you need. You buy with the Stoke and the Olmec deed. So let's just give this as an example. It's not one that we've got. It was one that just came up in the conversation. There's the low bar. There's the stochastic, turns up from under 20%, goes higher. There's the MACD confirming. And what do? You follow the price and wait for a peak. Higher highs is what you seek. The wave goes to A and then to B. Even the anticipated C and D. That's when it flashes a cautionary light. But all you got to do is make your stops real tight. In this case, the 9-period exponential moving average, probably on a closing basis, is what you would do. I'm showing the CLR, Continental Resource Inc. chart, the weekly chart. So now, that's when it flashes a cautionary light, but all you got to do is make your stops real tight. Suddenly it goes to E and F. A bell rings so loud it can make you deaf. Now, what's the bell? The bell is the shorter time frame, the daily chart, or the stochastic breaking, turning down, or the unbalanced volume, or the relative strength. I'll talk about those tomorrow in the webinar. And the best thing is right there. That's your bell that says, be careful here. So what you're going to do, which way to go? You sell at the high and you buy at the low. So these are examples. That's my song. I think it's perfect in terms of explaining in a way that you can remember it. And that, to me, that's really important, being able to show in real time, which we'll be doing tomorrow, both in mini intraday charts, but also I'll be doing it in what I want you to be looking at for Monday. Possible trades, why we're doing it, what we're doing it, why we are long certain stocks, why we went short, why we added to the shorts, all that sort of thing. Let's go to Dan in Basking Ridge, New Jersey. Hi, Dan. How you doing?
Doing well. Basil, I was asking if you could confirm the wave count on VIIX.
Yeah. So the VIIX, folks, is now the Chapman wave works in all time frames. Why did it not go? Oh, I must have hit that by mistake. There it is. So this is the VII. I was looking to see why it was a peak F. No, it's the VIIX. There you go.
Yes, sir.
Okay. So what I'm looking at here on the daily basis?
Yes.
Okay. So now let me just do this. Let me go back here to this one. And let me do this. Just 1 second. And okay. Yep.
Sure.
What you were going to say what?
Well, it's I got into this yesterday again, but also hit a round number low today.
So I've got a 65.98 low.
Oh, okay. I'm seeing 66. Okay.
Okay, so that's interesting that you say that. So I'm just looking at this and I'm thinking, yeah, different software packages do different things. So let's do this. It doesn't matter about the round number. In fact, when you've got a derivative of a derivative, this being the velocity shares VIX short term, is this 1-to-1 or is this 2-to-1?
No, this is a single. UVXY is the double.
Yeah, I know that very well. Yeah, UVXY. Okay, so what I've got here is, no, let me do this again. This is A to B. Failure. There you go. So what I've got here on the way down, the troughs are not as important as on the way up. In fact, on the way up, the VIIX, which is the velocity shares VIX short term, went from a low of, on the 5th of August at 75.75, it went to peak A, peak B, peak C. How does the song go? The song says it wants to get you to a peak D. It goes to a peak D right there on the 30th of August at 93.80. Then it comes down. It actually comes down just in two troughs. Is it two troughs or not? 36.43. It's three troughs. Okay, comes down to a C. So what happened was, at that point, it had another buy signal. And the buy signal went from the 72.65 low on the 19th of September to peak A, peak B, peak C on the 3rd of October, and then peak D on the 9th of October at 94.14. What does it do? It comes plunging down. Okay, so it has to pick up. No, it made a new recovery high. All right, so it picks up the wave count, and what it's done is it stopped right here on the 7th of November. So that was the 19th and the 5th. I like to also look at different patterns because you'll be surprised. You can go through different charts, and you might find that at the very beginning of the month, historically, over a period of a couple of months, if you're looking at a daily chart, there's always been a low or a high on the first few days of a month. I like to look at that. It just gives me some sense because I love to be counting bars, and just like you do in music, it's very important to know where you are in the temporal aspect in terms of looking at time and space. So now what I'm looking at is the low. So you got in yesterday. For a moment this morning you were underwater, and now you're looking good, right?
Yes.
Okay. So now I'm going to make it real easy. I don't know if you have enough of your positions, but on one part of the position, I would put a stop, not at the low today of 65.98, just a little bit above it, maybe 66.10. It's trading at 67.02 right now. Here's the reason. If it starts to pull back and it actually gets all the way back to 66.10, that's going to say, hey, there's still residual strength in this market. There are enough stocks like a GE that are showing some kind of a little bit more. It's like I always have this image in my mind. It's a horrible image, but that's the image I have. This goes back to my little motorcycle racing days. When you put your brakes on and you go into a skid, or especially if you slide, and you're sitting on top of the bike as it's sliding, it doesn't know how to stop because it's got to, until it hits something, or it has much, much more friction. And that's kind of what I'm looking at here, that the Dow is upside momentum. There are so many signs that are saying it's getting really toppy, but there's still enough momentum to say, hey, I can still maybe go a little bit higher. I don't know. I don't think so. But that's what I'm looking at here, because the fast-moving average of the MACD in the Dow is still okay. But if you look at the MACD's fast-moving average of the VIX, the VIIX index, folks, it's like the VIX index. I call it buying and selling pressure, not fear and greed. That's a term I don't think is accurate. It's buying pressure and selling pressure. I think that's way more accurate. And that's showing that there is some buying pressure. The VIIX can break into the 67, the height today is 6780s, preferably get to 6850 by tomorrow morning. That MACD will turn positive. The stochastic will start to rise from 4%, where it's kind of pathetic. It really, to get it to 20%, which is really important, you're going to have a big rally in this upper the 71 area, maybe 69.5, 70 area. So it's a starter position. So here we go. I would put a stop on a little position on where I said the 66, about 66.10. And I would definitely put a stop under the low today of 65.98. I know it sounds like 15 cents is not a big deal because they can do that in a split second. But look, the Dow's only down 36 right now. The S&P is much weaker. The Dow should not be able to lead 500 stocks. So far, it has been doing that. So I'm saying there's some residual strength that you want to get rid of. So that's a starter position you've got. I think that's fine. The 120-minute chart says about the same thing. The start of an attempt to move higher, still early in the game. You want to see by 3 o'clock this afternoon the VIIX somewhere in the 67.57 area. That'll really be a good sign. So I hope that helps you.
Great, thank you.
Okay, thank you very much for calling. I appreciate that. Let's go to Joe in Fort Collins. Hi, Joe. How are you?
I'm well, sir. And yourself?
Very well, thank you.
Good. I wanted to look at PRD. Trades on Toronto.
Oh, okay. I've got it here. I didn't usually get Toronto stocks. Not sure why the daily's not showing up. Hey, come here, mister. Okay. R, there it goes. Must come up. I've got it. There we go. That's a start. Move. Don't want to run out of time here. Oh, I'm not getting the daily for some reason. Is it trading at $19.77?
No, sir.
Oh, then I don't get that.
$1.40.
Oh, okay. I don't get the Toronto. That's what it is. I don't get the Toronto Exchange. This is Primus Guaranteed Limited 7%. I don't get it. I can't do it. Sorry.
Oh, well. Thank you anyway.
Call me again Monday if you can find. If it has its compatriot who trades on the New York Stock Exchange, we'll look at it, okay?
All right.
Have a great day. Thank you for calling. Sorry, Joe. Folks, we'll be back in a moment, and we'll do some looking at different things, and I'm going to be...
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. I'm showing here a chart from my CD introducing the Chapman methodology. Used to call it the dreaded H-pattern. Now we just call it the H-pattern. It doesn't matter. It's the same principle. It's just I don't want the implications of anything dreaded or not dreaded. That sometimes the price comes down, makes these arches, these scallops, and keeps closing under the left side low bar, and then all of a sudden it makes the H that goes to an M, soft M. So it's a lowercase h, lowercase m, and that continues. Hey, wait a minute. Haven't we seen this before? Yes, we've seen this before. We've seen this right here. This is what Twitter just did. It came down. It went up. Look, IPO, 1 minute chart. It goes up, fails at a peak. A peak C minus is just a bad thing. You fail at a peak C minus, you can come all the way back down. I wanted to see a break of the 45 low, because that's very important. So 45 was the round number low. The last move down was to 44, round number 44. But there's the H pattern. Let me just get rid of this line here. There's the H pattern that goes to an M pattern that goes to an even weaker H pattern right there. That says any break in Twitter of the 45 round number low that was made just recently, it's an IPO back at 11/28. If it breaks that, it's going to retest the 44. It means that right here, the stochastic has to start moving higher. The MACD has to move higher, and it needs very quickly to get to the 45.73 level. Otherwise, you're going to do even more testing of the sideways move of a very pattern we know. Now let's go back to the charts. Yes, the question was triple M, MM, leg F. Yes, leg F, unless there's an instant restart. And I'm going to mention this. Why? I don't think it's going to happen. But I can tell you this, that Triple M has not broken down yet. It's looking fantastic at 90 points as is 3M. The MACD is good, 90% in the stochastic daily. The weekly is 93%. The MACD is expanding. It's in leg E. The monthly has broken the resistance as in leg E. So while I'm thinking that we're getting real close to some kind of a pullback, if there's a breakout, look, let me just go through this. GE, which we are long in my opening call, is making a potential doji candle F right now. I don't know if it'll be a top or not, but it's F. I could count it another way. I'm calling it F for now. D in the weekly, E in the monthly, right at resistance in every case. Let me show you IBM. IBM had a retracement bounce. I don't know if it's more than a bounce. It's a bounce. It might go a little higher, but it's holding quite well here. But it's in a major down move, and this is the bounce of the low. So it could go, it's a 179, could bounce to 182, 83. If it gets to 184, together with G and Triple M, and look at UTX, this is my Dow Quartet. UTX is a leg D, possible doji, MACD's at 81, MACD's good, stochastic's at 81%. It's underneath, but holding the 9-period moving average in the weekly, and there I've got an alternate count, G/B. If these stocks, and D in the peak D in the monthly, if these stocks continue to lead, and all of a sudden you've got strength in these, even just these 4 stocks, they can allow for a breakout of the very strong 15,820 to 15,850 level. I suspect that's not going to happen, but you've got to be aware that it's possible that fewer and fewer stocks are leading the market higher at this particular point. You've got to be a bit careful. So let me give you the parameters. I won't be here tomorrow, Friday. If this is archived, then we'll be using the show tomorrow again. If it is, here are the parameters I'm looking for. The Dow needs to close underneath 15,570 to signal to me that this is going to be a peak E-top, and it has to do it without taking out today's high of 15,797.68. Number one. Number two is if it does take this out, it's extending the move, and that says that the technical is saying there's still residual strength. Don't fight the tape yet. And in the cup formation that's forming in the weekly chart, very often these triple cups break down. So that's another reason why I'm looking at 15,820 as really a start of a breakout area. A breakdown and something else happens. Now watch the volatility index. It needs to get to the 1460s for
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.